Hello everyone. My name is Swati and I work with ByDesign CRM Money team. This demo is about enhancements made in the integration of Business by Design with external tax calculators, Vertex and Avalara. To understand as to why Business by Design requires such integrations, I'll narrate two court cases that happened in two states of the US. The first court case is from the year 1992, where an office supply retailer named Quill Corporation, without having a physical presence in North Dakota, sold products there. Hence, North Dakota sought to collect sales tax from Quill Corp. However, the US Supreme Court ruled in favor of Quill Corp and prevented states collecting sales tax from retail purchases made over internet or e-commerce route unless the seller had a physical presence in the state. Later in 2018, a similar court case was filed by South Dakota against Wayfair Inc. The US government estimated that in 2017, states had lost over 13 billion USD in taxes they could not collect. Hence, the US Supreme Court finally held that the states may charge sales tax on out-of-state purchases even if the seller does not have a physical presence in the taxing state. Since US has numerous jurisdictions with diverse tax rules varying frequently, we in ByDesign integrate with our external vendors Vertex and Avalara to fetch the latest tax rates for every transactional document within the system. We have now enhanced this integration to support gross pricing, taxability of freights. Scenarios involving tax caps and thresholds are also being met, basically leveraging the power of integration. To begin with the demo, let's log into the ByDesign system. Let's create a manual customer invoice within the system for a sale that involves gross pricing. Let's select the distribution channel as indirect sales so as to make it gross. Let's select an exempted product as well over here, along with the taxable one. So the second line item is an exempted product, while the first one is the taxable one. Now let's go to View All, Items, Taxes tab to view the tax calculation that has been performed for both the taxable and the exempted products. And we see that the first line item has been taxed and the gross taxes have been calculated, while the second one is exempt and the exempted base amount holds the entire amount. Moving on to the taxability of freights. Not all sales involve taxable freights. Freights can be taxable, non-taxable, or partially taxable, depending upon the to and from locations of the sale. For example, freights are taxable in New York but non-taxable in California. Now let's have a look at the Vertex Sandbox system where the product code freight is mapped to common carrier FOB destination, which means the taxability of freight will depend upon the ship to location of the sale. Now let's pull out the latest taxability report of the tax codes maintained within the Vertex system. It's evident from the report that the tax code common carrier FOB destination makes the product freight exempt for California. Getting back at the invoice request, let's remove the items and switch to net pricing by changing the distribution channel to direct sales. Let's add a product. we see that the product is taxable. And then let's add a freight to it. Let's say a freight of 10. And the freight also is taxable because the ship to location as of now is New York. Let's change the ship to location from NY to CA, that is California, where the freights are non-taxable. We can see that the list price of the product appears as the tax base amount while the freight of the product appears as the exempted base amount. Which means although the sale is taxable in California, but the freights are still non-taxable. Moving on to the tiered taxation in Tennessee, the state of Tennessee follows a tiered sales tax program. Let's get back to the invoice request and change the ship to location to Tennessee. Let's go to the Items tab and increase the list price to a considerable amount so that the tiered taxation is visible. The tax base amount of the three tax lines are different, which means tiered taxation has been applied. The surtax in Florida is a county level tax applicable to the first 5,000 of the sales amount. Let's change the ship to location of the invoice request to Florida. Let's go to Items Taxes tab. We see that only 5,000 of the 6,000 USDs have been taxed at the county level.